It's just another manic Monday. I wish it was Sunday. Whoa, because that's my fun day. It is Monday, May 8th, 2020, and the 8:50 a.m. Central Standard Time. Couldn't go to the gym with lady friend this morning, so we're pushing it off until the afternoon. She had a meeting this morning, and then we have a meeting at 10 a.m. meeting with a couple of young real estate agents that want to join our team. So we'll see how that goes. I'm excited. I always like to see young people enter the real estate sales business. After all, it is the greatest small business opportunity in the world. Bum. Yes, it is indeed. So here we are looking in on the markets on this Monday morning. Started green, and now, for the most part, you've turned a little red here. S&P 500 is down 0.12%, almost 5 points. Dow Jones down 54 points. And the NASDAQ down 38 points. Russell 2000, Russ is in the green, 5.88 points. And crude oil up nearly 3%. So we got our eyes on things here, just trying to look at what our plan is for today, what the plan is for the week. Got a couple of economic data points coming out. What do we have here? I was looking at it earlier this morning, 9 a.m. Central. We got wholesale inventories. Chicago Fed President Goolsbee, old GB, old Ghouls there, is speaking. And then the senior loan survey, they call it the SLOOS report. Is that what it's called? SLOOS? Something like that. Senior loan opinion, something or other. So for the first time, we'll kind of be paying attention to that because it was brought up a few times by Fed Chairman Jerome Powell last week in his press conference. Wednesday, we got the Consumer Price Index, the old CPI, and then core CPI as well, both of those. Then we'll be looking at the year-over-year numbers. That's going to be important. Thursday, we got Producer Price Index, core PPI year over year. We also have the initial jobless claims. That's always interesting as well. Import Price Index on Friday. So not a quiet week. Still have a number of earnings reports coming out this week as well. So let's look at the big board over on the Robinhood. See what's cooking. I've got this Bank of America 2850 call, 13 contracts. I went aggressive on that just to see. It's a short trade. I put it on, I think, Friday afternoon. And currently, Bank of America trading at 2790. So that is a bit of an aggressive trade with the 2850 call. So we'll be watching that all week. Caterpillar, we got the training wheel on. That's the put credit spread, $200 on the short leg, 195 long. That's looking good. Costco looking good as well. 482.50 on the short. Dow Inc., formerly Dow Chemical, the 52.50 on 5 contracts on that credit spread. Devon, we've got 11 contracts, $53 strike call covered calls. So currently it shows that it's taken gas, but it's far from that from what I know. Well, I wouldn't say far from that. It's making its way up to you, babe. Devon Energy currently at 51.48, and we have a $53 strike on the call. And we don't want to get rid of those shares at this time. EOG, that one's in the money for sure. EOG Resources currently at 115.88, and we have a 115 call. How many contracts? Just one. So we'll be rolling that at some point this week, I would imagine. Ford, look at that. It's at 91% profit and only $10. So so we got that covered call on Ford. We have 2 contracts, IBM, a 122 strike price on the puts, and it's currently at 123.59. So that one's still just doing just fine. Johnson & Johnson, 165 call. We'll roll that. Coca-Cola, $63 call. We'll roll that. We have the MetLife $57 puts, and that's taking gas right now, even though it's showing it's up. The reason that it's showing it's up is because we executed the training wheel trade, which starts with the put credit spread. And then if the trade gets into trouble and it's an asset that you want to own, then we sell to close the long leg at a profit, and then we roll the short leg for more premium. So you got the triple premium crown you're wearing there. But right now, MetLife taking some gas, trading at 54.47. So we'll be watching that this week, and then we'll likely be rolling that out for more premium, and we'll roll it possibly still into the money at $57, depending on the action on that. If we can roll it out and down, we'll look to that as well. We have Philip Morris. I actually exchanged this. I rolled it. It was a call that we had $100. It was $100 strike price on these 4 contracts. And I rolled it back and down, which is like, hey, that seems crazy. But I was able to shorten our time frame that we waited. Let's see if it's here. So we collected $60, and what we did is we rolled it from the 5/19 expiration date at the $100 strike to the 5/12 this Friday at $97. So, it had some risk involved, but it essentially becomes a double premium play because we had already collected premium by selling those covered calls in the first place. So we'll watch that. Currently at 95.60. So 97 will be under pressure if the market is green this week, but we don't know. When those CPIs and all those reports come out, we could be looking at the bitter beer face again. And all 5 of our Qualcomm contracts are taking heat, even though they're showing that they are profitable. And the reason is, again, we started with the training wheel on these trades as well. So we'll be managing those. And then we have a Starbucks training wheel on. It's $100 short, 97 long. That one's doing very well because Starbucks is at 107.51, and it was around 104 when we put that trade on, and we collected $108 bills. So we'll let that ride at this point. Ride it out into the sunset. What else we have on the board? Target. We got a training wheel on that. 150/148. And again, what I mean by the training wheel is this is based on the wheel strategy on an asset that we do or we wouldn't mind owning, and that's Target. I know what they do. I've been in there, and there's always lines. So that's the eyeball test. And the training wheel would be putting this put credit spread on, which then limits, right? It limits the amount of collateral that's needed for the trade because it's only $2 wide and it's 2 contracts. So $2 wide equals $200 times 4 or times 2 is $400. And then if it becomes in trouble, or if we want to just risk it for the biscuit, we sell off the long leg. We sell the 148 puts out from under the 150 short leg. Okay, this is our protection, right? Our defined risk right now is between 150 and 148. That is the defined risk. If we just let it go, and even if it turns sour and went against us, our risk is defined. We can only lose X amount of dollars. But if we want to do the old training wheel and sell this 148, we could collect more premium right now. For instance, we got 2 contracts on it, right? And if we did just on the low end of that, which would fill immediately, we would sell to close that long leg, collect 34 more dollars to add to our pocketbook on the Target. Right now, we won't do that. We'll just let it ride probably out into the sunset on that. Where is it? There it is. So we'll let that ride out to the sunset, and it shows our cash collateral of only $400 on that. And we collected over $100 when we put the trade on, 118. So that's a nice return on collateral when you just let it ride. So what is under target? We have Valero 112 calls. Valero is up today, but I don't think it's threatening the 112, is it? 108.29, up 1.15%. So currently not a threat to our 112 call. And What else we have? We've got I went aggressive on these on the training wheel on the Walgreens as well. It's at a 31 short leg, 29.50 long. And then we have the 33.50 calls, 10 of those contracts at a 33.50 strike. And that's it as far as what's currently on the board for Friday's expiration. So we'll be looking to manage those as we go. Let's go to the big board on the watch list on the Yahoo and see if anything stands out. And again, we would be looking to execute the training wheel, which is the beginning of our wheel strategy with a put credit spread. And typically, you're going to look for action in the red. We're not interested in AMD right now at the 89.36, I don't think. Microsoft, I don't think we're interested in at 308 because I think it's a little overblown right now, but we could be completely wrong. Amazon, if it goes down some more today, we would look at that. Walgreens, we've already got a training wheel on, so we'll leave that. Walmart might be a consideration. Maybe Procter & Gamble, maybe Johnson & Johnson. Costco, probably not. We still have one on. Pepsi could be a consideration. So we'll look through all those, see what's going on. I will likely, it's not likely. I definitely will not be recording another video until after our 10 a.m. meeting because it's 9:01 and I haven't even showered yet. So I'm going to have to let you go right here and right now, and I'll see you in the next video.